Welcome to Quick Takes. My name is Michael Antonelli. I'm a market strategist in Baird's Private Wealth Division. Today's topic is going to be the national debt. See it right here? Yeah, it's a big number. 28 trillion. Number's just ticking up. 129% of GDP. Let's talk about the national debt. I know it's on your mind. Our advisors hear from clients all the time about it. So let's talk about the U.S. economy. Let's talk about what matters when it comes to the national debt. And let's talk about how the U.S. has done in the past with levels of the national debt. We're going to start with a story. That right there, that's Harry Truman. In 1946, Harry Truman's Council of Economic Advisors came to him and he said, "We face another Great Depression due to the levels of the national debt. The national debt's high." Did we have another Great Depression due to levels of the national debt at the end of World War II, which we had just won? We did not. And by the early 80s, debt to GDP was at its lowest level in half a century. Did they pay it back? Did we write a check to pay back World War II? We did not. I'll tell you what happened at the end of this video. We need to talk about the U.S. economy. We need to talk about just a high level view of the U.S. economy. The U.S. economy is a credit-based economy. Credit-based. Think of it as a balance sheet. Liabilities and assets. A balance sheet. All money is a liability for somebody and an asset for someone else. When the U.S. government issues a treasury bond to build a bridge or to pay for a fighter jet, it's a liability for the government, but it's an asset for someone else. An asset. Somebody bought that treasury bond and it is their asset. Who owns the national debt? Who are the people that own the public debt? This is a list. This is a list right here of who owns the public debt. The top foreigners, 6.8 trillion, that's 24% of the national debt. Look at the rest, 76% of the total national debt holders. Look at the rest. Mutual funds, the Federal Reserve, Social Security, private pensions, insurance companies, other individuals. That is an asset for those people. They bought those bonds. They want them. The world stores its wealth in the dollar. The dollar is the world's reserve currency. So when that balance sheet that I mentioned, our economy, when the government issues more debt, they're also making more assets that people are buying. Remember, debt for one person is a liability, but for somebody else, it's an asset. What matters when it comes to the national debt is not the level of it. It's how hard it is for the U.S. to manage it. How hard is it for the U.S. to manage the national debt? Let's take a look at this chart right here. The top is federal debt held by the public as a percent of GDP. You'll notice it was kind of low in the 2000s. It started to rise as the 2000s went on. It continues to rise right now. At the bottom is real interest payments as a percent of our economy, as a percent of GDP. So the U.S. real interest payments on that debt. You'll notice they're falling. They've been falling since 2000. Why? Well, interest rates have been falling. Basically, for 40 years, interest rates have been falling. So while debt has gone up for the U.S. government, it's been easier for us to manage it. Interest payments as a percent of our economy have been falling. But you say, Mike, what if interest rates rise? Mike, what if interest rates rise? Is it going to make it harder for the U.S. to manage that debt? The Fed sets interest rates in the United States. And if interest rates are rising, that means growth expectations are starting to rise. Better times ahead. You're actually seeing that a little bit right now. Yields have started to rise. Our expectations for growth are rising. That's good. The economy is going to grow faster. That's good. That means debt as a percentage of GDP will shrink. As the economy grows faster, interest rates rise. Will we ever pay this off? The answer is no. We will never pay this off because that's not how this works. The United States is a perennial entity. There's no expiration date for the United States. I have an expiration date. I hope it's a long time from now, but I face maturities. I face end of my mortgage. The United States can roll its debt. There's no end date for the United States that they don't face a maturity wall. We're never going to pay it off. In fact, let's think about that. How could the United States ever pay off its debt? There's really only two ways. Number one would be just to default on it, just to say, all right, we're not paying it anymore. We're defaulting on it. That's bad for the obvious reason. All those people that hold it as an asset, that's a disaster. Another way, the second way, would be for the government to save. Okay, the government runs a surplus. The government saves. In order to do that, somebody else has to run a deficit. It's called the paradox of thrift. The private sector would have to run a deficit for the government to save. Do we want the private sector running deficits so the government can save? No, we want the balance sheet to continue to expand. We want it to continue to expand. I talk to people all over the world about markets and investing. I spent 12 years as an institutional equity trader for Baird, talking to wealth managers and sovereign funds and pension funds and hedge funds. And I would always ask them, what are you worried about? Like, what are you thinking about in the market right now? And the national debt never came up. Not once. It never came up. What are they worried about? Things like, Fed policy and economic cycles and earnings estimates and sentiment. Those are the things they worry about for stocks and investing. The national debt literally never came up in a meeting with the most sophisticated investors in the world. Do we want the government to just expand endlessly? Of course we don't. Of course we don't. There's probably parts of the government that could be smaller. We don't want it to expand exponentially instantly. We don't want to print money and give everybody $1 million instantly because of inflation. The current thinking is that inflation is the constraint on government borrowing. That inflation will tell us when we're borrowing too much. And right now, inflation's still low. Go watch my inflation video I did with Ross Mayfield if you want to talk about inflation. Inflation's the constraint. We printed trillions after the global financial crisis to help fight that. Inflation barely ticked. We're printing trillions now to fight COVID and the recession. Inflation's just starting to tick up, so we're watching inflation. And if you're worried about debt and inflation, honestly, the best place to be is in the stock market. Over the long run, the stock market has done the best job at protecting the purchasing power of dollars. It really has. So how did the U.S. get out of that end of World War II high level of debt to GDP? How did they get out of that? Here's kind of a look at it. This red line is how debt to GDP soared in World War II and then what happened as we approached the 80s. Did we pay it back? No, we outgrew it. The economy grew faster than the debt. And that's what I think will happen now. We'll get to the other side of this. The economy will grow faster. Debt to GDP will fall. I just want you to know that the national debt is always used as kind of a political bludgeon. It's just a scare tactic. The most sophisticated investors in the world are not talking about levels of national debt as part of their investment strategy. They're just not. When my dad was born in 1948, the national debt was $252 billion. When I was born in 1973, it was $458 billion. When my son was born in 2006, it was $8.5 trillion. It just grows over time. The balance sheet expands. If interest rates are set to rise, that means growth expectations are set to rise. That's good. That reduces the burden of the national debt on the American public. So I just want you to know, if you're concerned about this stuff, reach out to your advisor so we can talk about it. I wanted to make this video to reassure you. If you want to talk about other things, if you want to do some more of the national debt, I'm happy to do a follow-on video. But of all the things you could worry about, honestly, the national debt's like number 500. Worry about savings and spending and your investments and managing your behavior when the world kind of goes topsy-turvy. Those are the things I want you to focus on. You've hired us to help you get through turbulent times. Let us. So thank you so much for coming to my little event. I plan on doing a lot more of these, so stay tuned for some other fun events. I think the next topic I'll probably touch is so you want to sell. You're interested in selling stocks. What does that mean? That's probably the next topic I do. So thanks for coming to my talk, and we'll see you soon.